There's only going to be a limited amount of life-changing choices that you can have, in your whole entire lifetime, guys. You guys are on this earth from anywhere to 60 to 100 years on average. And there's only going to be a select few opportunities that present itself on this magnitude. Okay, what am I talking about? I'm talking about the Bitcoin halving. Okay, this is a 4-year cycle. And every time we go through one of them, it gets harder and harder to make money. Recently, people have been searching Bitcoin halving all over the internet. It's been going viral in China in their Twitter version. It's been going viral on Google Trends. Quite frankly, the Bitcoin halving is less than 3 weeks away. What is this opportunity? In this video, I decided to break it down not only in immense detail, but I decided to break it down very, very, very simple. For a person that doesn't even understand blockchain technologies and the opportunities of Bitcoin, this will be a video for you. For the people that already understand Bitcoin and just need more evidence to why it could potentially be $150,000 to $200,000 in the future, this video is for you. This video is for anybody that's looking to make money in Bitcoin. I'm going to be talking about the Bitcoin halving. I'm also going to make a price prediction in the near future and a long-term price prediction. Keep watching. All right, guys, so I got some, good information for you here. I'm going to be giving you the bullish case for Bitcoin. Everybody talks about Bitcoin. I've had a lot of people talk about Bitcoin being a Ponzi scheme. For some reason, recently, a lot of people have been conversing on social media, as well as some, I'm going to show you some, Google Trends data here and, Twitter, in China. People have been talking about the Bitcoin halving. Now, the last time people talked about the Bitcoin halving, approximately a year to 6 months after that point, it went viral. Bitcoin reached, up to $20,000. The amount of searches went absolutely insane. The amount of times people were searching Bitcoin price actually was up there with like stock prices on Google Trends. CoinMarketCap was a top 100 website in the world. And it's basically kind of bring on a lot of adoption. Now, every single time we go through this 4-year cycle, and I'm going to explain what I mean by 4-year cycles and the Bitcoin halving. Every time we go through the cycle, Bitcoin reaches a new all-time high. Now, where is that all-time high going to be and why? I dove into the data science. I found historical trends, exactly what's going on in Bitcoin. I'm going to give you guys a lot of detail. So if you already know about the Bitcoin halving, you understand where it's coming from, well, this is going to increase your confidence in investing in Bitcoin. Maybe you have some money on the side that if you haven't invested yet and you're looking to do it, this might be something that pushes you overboard. And if you don't know anything about the Bitcoin halving, guys, I'm going to explain it in extreme detail. I'm going to explain it for someone that doesn't really understand blockchain technology in general. By the way, if you haven't already subscribed to my channel, my name is Alex. I talk about everything cryptocurrency and entrepreneurship. If you're looking to make money on the internet, this channel is definitely for you. Please do us both a favor and hit that subscribe button as well as the push notification bell so you can get videos like this all the time. I try to keep it down to earth, try to just kind of back up everything with facts because, there could be a lot of fake on the internet. So let's jump into the video. Now, the first thing, kind of explained it in my intro. As you can see here, in China, they have like their own version of Twitter. And this article is clearly stating that it's trending. So Bitcoin halving is trending. And if you guys understand the Bitcoin and blockchain economy, China is one of the biggest, users of Bitcoin. People are searching Bitcoin, people. It's really that simple. I don't know how else to explain it. As you can see here, this is Bitcoin halving on Google Trends. You can see here, this is like the max, right? This was the max. We're reaching that point, okay? And I expect it to go further. I actually went parabolic recently. Bitcoin halving has been going parabolic. People have been searching it up. They want to know what it is. They want to know what's going on, which is, guys, if you look, like, for example, right here, the Bitcoin halving has happened in 2016. You guys know, hopefully you do. If you don't, in 2017, Bitcoin went to $20,000. It went from like around $2,000 to $20,000. That was the last parabolic run. That's where everybody made a whole bunch of money, myself included. I made a lot of money on that first parabolic run to the point where I was able to quit my job and do, all this stuff full time and everything like that. It was like literally the big stepping stone for a lot of people, right? Now, here's just some more evidence. What's happening right now with the stimulus checks, all this, commotion on the economy, right? People are kind of wisening up. They're researching these, finance books, the most popular finance books. They're researching what's going on with the stimulus checks. What does this mean for the economy, inflation? They're trying to understand what's going on with macroeconomics. Now, if I come over here, what's the first book that people typically research? They research Rich Dad, Poor Dad. You can see there's a little influx on par with Bitcoin halving. You can see The Richest Man in Babylon. It's another very, very popular finance book. You can see that it also increased. And then the most important, look, Robinhood investing, one of the biggest search terms when it comes to money in general. This is just kind of proving that people are kind of doing more research and understanding what's going on. And you can see that the quantitative easing, money in general, stock market, all this, the oil prices, it's in the news commonly, right? When people see it over and over again, they assort relevance and, importance to it, and they start learning. They start understanding what's going on. So towards the end of this video, we're going to talk about the block halving. Okay, we're going to talk about Bitcoin's price. I'm going to give you the price predictions and all the data. But just to give you some confidence, people, there's a lot of fundamental Bitcoin bullish reasons why this thing's going to explode soon. We're just starting. If you're watching this video now and it's, you're within the last 2 months of me making it, you are on the cusp of Bitcoin blowing up. This is a very cheap Bitcoin where I'm going to show you the statistics and the analytics and what I mean, guys. And I'm going to back it up with evidence. As you can see here, digital asset investment report. It's one of the only ways you can get into Bitcoin if you're doing like traditional finance. It's basically Wall Street. It's the best way to put it. To actually hold physical Bitcoin, as you can see here in Q1 investment highlights. So their Q1 report shows that they have reached, they literally broke all of their records right here. Grayscale raised $503 million in Q1, nearly doubled the previous quarterly high. So they doubled their last quarterly high. So that means that there's a lot of new institutional investors coming into Bitcoin. Okay, it directly shows right there. And this is with every exchange. There's been a lot of reports that these exchanges have been getting new users. And I'm going to talk about some statistics on literally people are creating new addresses in Bitcoin, right? We're seeing all-time highs in that aspect too. So if I come over here, I want to show you guys something really quickly. So the reason we haven't seen it go parabolic is specifically because of the adoption curve. As you can see here, if you don't understand what this is it's basically the curve that we look at, the chart that we look at for adoption. So first is the enthusiast, right? So a small majority is probably people getting into Bitcoin in 2015. It was me as well. I was playing around with Bitcoin for a long time. Then we have the visionaries. Okay, that's probably like around the people in 2017. Now there's no facts about this. Look, I want to show you this helpful tool that I found. That's me. That's people like me that got it in 2017. You don't understand how many people are creating videos and trying to teach people about cryptocurrency now that I've known. Being a personal marketer, being a person that sees it from like a real perspective. You know how many other people are hitting me up now? Asking me, yo, Alex, what about that Bitcoin? Because they saw it in 2017. They thought it was a scam in 2017, but now they see it's about to go up again. They're realizing they're going farther up in the adoption curve. Basically, the pragmatists are now starting to get into it. Okay, and this is what I mean by a once in a lifetime opportunity. When I was saying in the beginning, as Bitcoin goes up, yes, it goes up in more multiples. But as more money gets involved in Bitcoin and the cryptocurrency economy as a whole, less multiples and there's literally less chance of making money. Right? It's still ridiculous. Don't get me wrong. It's better than the stock market, any other financial instrument ever. When it comes to making money, like one of the biggest companies ever, Renaissance Technologies, actually just announced that they're getting into digital currencies recently. They're one of the most widely accepted firms when it comes to making money. They consistently get 70% a year. Just this year, Bitcoin's up like 95%. So cryptocurrency in general is absolutely ridiculous. In 2017, it was up like 10,000%, 5,000%. Don't quote me on that. But going from 2,000 to 20,000 is a 10x. Okay, that's a 10x. Renaissance Finance can't do that. If you were just to hold Bitcoin or Ethereum or any cryptocurrency, you would have made more money than one of the best firms in the world. Bitcoin is a huge learning curve. I know this firsthand, right? People don't just go into money, start learning about money, and then jump immediately into Bitcoin. Bitcoin is usually kind of like the last stop, right? People start learning about stocks, they start learning about this, they get burned in the stock industry, they understand that or whatever, and then they start learning about, scarcity, they start learning about the manipulation of the government, they start watching the documentaries that a lot of you probably already watched, right? And they understand, dang, like digital currencies are the future, right? And they get it, and then they start learning digital currencies. Right, I call it the 3-phase. I explain it better in my course, but the 3 phases is basically the first phase is them being confident enough to invest their money. The second phase is them actually making money, and then the third phase is them making a business out of it. Okay, if most people don't even go that far. But essentially what I'm saying is people are learning about this space. They're going to get to the point where they learn. Just like the last block halving, when people were searching block halving, seeing what it was, right? Block halving, I get it mixed up. Block halving, people were seeing what it was, right? 6 months to a year later, Bitcoin explodes. So as people learn about this project, they get more comfortable with the space. We should see more adoption. Now, I'm just going to be going over a whole bunch of bullish cases of what we're already seeing. So you guys understand that when it comes to the 4-year cycles, we're already starting. Okay. And I'm going to explain this 4-year cycles and all that. That's towards the end of the video. But let me just give you some bullish case scenarios of exactly what's going on. So for example, if you go on to the top, this is for today, the top 24 hours, like what's going on. As you can see here, the top 10 stories for Google Trends for today. This stock market, this is a direct impact of what's going on in the world economy, right? There's a reverse stock split, okay, and Valoric. It's this company that basically provides tubing solutions for oil companies, industries, low carbon energy. For energy companies, they provide tubing solutions. So essentially, if the oil industry is suffering, they're obviously going to suffer because they're not buying the supplies, right? It's pretty straightforward. So as you can see here, I just want to kind of explain the reverse stock splits. This is basically a sign that the company is doing really bad. Reverse stock splits do not impact the corporation's value, but they're usually a result in the corporation's stock having lost substantial value. The negative connotation associated with such an act is often self-defeating, as a stock is subject to renewed selling pressure. So essentially, it's a trick. What they do is, it's kind of the opposite of Bitcoin, right? There's only a certain amount of Bitcoin and you can't change that, right? There's 21 million Bitcoin out there in circulation. You can't change it, or not in circulation, but max. Right, there's 21 billion Bitcoin max. What they're doing is they're taking their dollar stocks. So let's say, for example, just to make numbers easier, let's say they have $100 stocks. Okay, what they're doing is they're splitting that into two, and they're taking 50 to 1 stocks. All right, so that what that means is they're taking, instead of having 100 stocks, they have 2 stocks worth $50. So the company is not increasing in valuation. They're merging their stocks together so that if somebody does purchase, they actually have to purchase a bigger share. Right? So this is literally a manipulative thing, which brings me to my next point. Generally, a reverse stock split is not perceived positively by market participants, okay? It indicates that the stock price has gone to the bottom and the company management is attempting to inflate the prices artificially without real business proposition. Okay, the reverse stock splits have been popular in the post-dot-com bubble era of 2000. Okay, when many new companies saw their stock price declining to record low levels, this is what they did. 700 companies went for reverse stock splits. What's that? It's basically signaling that there's problems. You guys clearly see what's going on, regardless of the printing of the money, which I have other videos for that. If you don't understand the stimulus checks, you don't understand how it's a negative effect on the economy, just really quickly, if you have juice, right? If you guys have juice and the juice is sweet and you like drinking this juice that's sweet, right? It's a purchasing power. It's basically your money having purchasing power. If you put water in that juice, it dilutes the juice. So essentially what I'm saying is the juice is like you having money in your bank. If you have money in your bank and they print some money over somewhere else, that makes your money in your bank less valuable. That's a simple explanation. It's a little bit more complicated than that. But the more money that they print, the worse it is for the people that have money. The worse it is for people that are under mid-class to lower class, basically. People that are rich, they get bailed out. They get the majority of the money, which it doesn't really affect them too well. Right, so if I come over here, I just want to show you guys what's going on. If you didn't see what's going on, guys, oil went to negative figures. So literally, technically, I mean, not really, like you couldn't get paid to receive oil, but this oil crisis is substantial. And this is the world's energy, people. This is like the world's first commodity. This is one of the big things that governments are fighting over, oil. And it reached negative territory. The biggest crash ever for oil. What I'm saying is that there could be a potential, bubble pop, and what we know as modern finance. There could be an economic turndown. Okay, there could be something going on. There's millions of people that are jobless right now. Unemployment is higher than it's ever been ever. Layoffs are ridiculous. People are not getting to work. This epidemic obviously has a huge problem, and the house of cards is coming down. So as we go over here, just some more bullish information. Bloomberg publishes an article, I think it was today or yesterday. So this year, what they're saying is that it confirms Bitcoin transaction from a risk on a speculative asset to crypto's market's version of gold. So they're basically trying to say that Bitcoin is being solidified this year of what's going on, right? Futures, this is Bloomberg, people. This is not me, this is Bloomberg. Increasing futures open interest, declining volatility, and a relative outperformance despite the stock market shakeout indicates Bitcoin is maturing from a speculative crypto asset towards a digital version of gold, guys. Okay, that's Bloomberg. Okay, this is a bullish case scenario. Okay, another thing. Okay, stimulus checks. Everybody got $1,200. This was tweeted by Armstrong, basically the CEO of Coinbase. The CEO of Coinbase says, this is the percentage of deposits that are directly the same exact size as 1,200. And you can see the spike there. These people were literally depositing $1,200. Okay, so that is directly correlated. People are dumping their stimulated checks into Bitcoin because they're scared. People are getting scared of what's going on. They're getting scared, and I don't blame them, right? Here's another one from Glassnode Insights. Bitcoin's hash rate has recovered from its recent drop, showing a clear upward trend as we're approaching the halving. What does that mean? Hash rate is basically how much computer hash is dedicated to mining Bitcoin. If you don't understand how Bitcoin's mined, I'll explain it. So when there was the flash crash in Bitcoin, Bitcoin went down to like 3,800, 4,200 or something like that recently, okay? The hash rate had to drop because people were mining and they weren't profitable. So they literally had to turn off their computers because they weren't making money as miners, okay? We're up 64% from that drop, okay? That's less than like 2 months ago. We're back up 64%. Just in time for the halving, which will all make sense as we go through this video. Another one, okay? This is from Glassnode Insights. Bitcoin experiencing influx of new users. Kraken recorded, I told you guys in the beginning, Kraken recorded 83% rise in signups and a further 300% increase on verifications. So people are not only signing up for the exchange, but they're putting their details in to get a KYC, the know your customer, putting their ID so they can get cash directly into crypto. Not only are the exchange rounds growing, but new user activity on Bitcoin network has also accelerated. As you can see here, new users on Bitcoin, which is going to blow your mind a little bit more. Despite this influx of new users, Bitcoin has continued to flow out of exchanges. So when people go on exchanges, when people have Bitcoin on exchanges, they're looking to sell it. That's how Bitcoin is, right? Everybody knows exchanges are not the way to go. There's hacks that can take place. Your funds are not safe on exchange. If you're in cryptocurrency, you generally know that. So the only reason your money would be on exchanges, I can vouch for this. The only reason my money is ever on exchanges is because, I'm going to sell it. Okay. So as you can see here, people are not leaving their money on exchanges. They're putting it in their wallets. Okay. That's suggesting that people are trying to save Bitcoin as a safe haven. Potentially, not right now, but potentially in the future, Bitcoin could be seen as the safe haven that we're looking for. Now, it brings me to my next point. Let's start talking about the Bitcoin halving and exactly what's going on here. I'm going to break it down for you, what mining is and everything like that, and try to keep it as simple as I possibly can. So just really quickly, I want to explain to you something called scarcity. Okay. Now, just like any property in the world, right? So for example, if you're a basketball player and you're better than another basketball player, you're going to have certain skills and sets, certain properties to yourself that's going to outcompete theirs. For example, you can shoot better, you're quicker, you can dribble better, right? These are skills that are better than the other person. And if you play a game of basketball 200 times, you're going to win more because you have better skills. It's the same thing with money. Properties of money. There's properties of money. I'm not explaining in this video. I have a video for that. I'll link it in the description below. But there's certain properties of money that make it superior over another property of our money, right? And one of them is scarcity. This is a huge factor. And, Bitcoin, gold, and a lot of commodities. Scarcity is a huge factor of why it's valuable. Now, it happens to be that the US dollar absolutely sucks as scarcity, but let me explain what scarcity is. So the max supply of Bitcoin is only 21 million. And actually, it's going to be less than that considering, we're not going to get to that point and you're going to be dead by the time we get to that point. What I'm basically trying to say is if you come over here, there's only 46.8 million millionaires. Go back to Bitcoin. Only 21 million Bitcoin in the world in the supply. Okay, let me go back over here again. There's only 46.8, let's call it 47 million millionaires. Let me go back to the spot. Do you guys catch my drift here? So not even a millionaire. If everybody started adopting Bitcoin, okay, if everybody started adopting it, this is what scarcity is. This is why it's so important. Not even every millionaire in the world could own one Bitcoin. They would be able to own like a half a Bitcoin. And that's considering, that there's guys with hundreds of thousands of Bitcoin. So realistically, we could say that if every millionaire in the world tried to grab Bitcoin, if it started being adopted, they wouldn't even be able to hold 0.1 of a Bitcoin or 0.2 of a Bitcoin. That's pretty safe there, okay? Scarcity has a huge effect on the price of anything, right? Because, look, why do fashion brands destroy billions of dollars worth of their own merchandise every year? Clear and simple. The brand admitted to it, okay? They demolished their goods. It's a part of its strategy to preserve its reputation of exclusivity, right? Fashion brands are notorious for being able to charge high, super expensive prices for items that you can get for like a fraction of the cost. And the reason they can do that is because of scarcity, okay? It's a collectible, right? Jordans, collectible. People collect them and sell them for thousands of dollars. Some Jordans are worth like 30, 40 grand because of scarcity. It's one of a kind. I want to hit this home really hard. Now, if we come over here, this is purchasing power. So I explained to you guys with the little cup, dilution of the water, purchasing power of the dollar versus Bitcoin. Bitcoin will literally get you more items in reality than the dollar would, since at least the past, since like 1913 or something like that. And that's because of scarcity. They keep printing. They keep printing money. I don't know how else to explain it. It's short-term good, yeah. It's short-term props up the stocks and makes people more confident. But if you're not invested in stocks, if you have no investments, right? Or if you have a certain, like, if you're in like minimum wage has to go up too. If your minimum wage hasn't gone up and it printed all this money, essentially you are literally making less money now because your purchasing power is worth far less. It's simple supply and demand. I know you can feel it. Like a lot of this stuff in cryptocurrency, very, very hard to explain. It takes years to really understand it. And if you're new to cryptocurrency, just feel it. I know you can feel it. There's something wrong with receiving a $1,200 free check. Nothing's free in life. Let's talk about Bitcoin mining because it's very relevant when it comes to the block halving. Now, this is a picture. I'm not going to go off the picture. I'm going to explain it in my own way because it's so much more complicated than this. I'm going to dumb it down as simple as possible. So essentially what's happening is every 10 to 15 minutes or so, there's amount of Bitcoin rewarded. So just like mining gold, for example, these gold companies, they're mining, right? And they're getting about 2 to 3% a year when it comes to the relative, supply of gold. They're mining, they got some gold, right? Same thing with Bitcoin. There's computers that are contributing hash. We talked about the network hash before, how we recovered 64%. They're contributing hash, computer power, to basically solving this random puzzle. That's what Bitcoin is. It's a random puzzle. It's a lottery system. And whoever solves it first gets rewarded right now. The specific number is 12.5 Bitcoin. So every 10 to 15 minutes, 12.5 Bitcoin gets split amongst the pool. So I'm not going to explain pools in depth, but essentially it's not like you don't get 12.5 Bitcoin if you win. There's a pool. There's a whole pool of people that all connect their hash power together, and the 12.5 gets split amongst those people in the pool. So essentially it's like one person mining, but everybody's contributing to that one person, and that one person won 12.5, which they split out their shares to everybody according to how much hash power they have. Okay. Now, the reason I explain that is because that 12.5 number is decreasing to 6.25 in less than 3 weeks. This is what the Bitcoin halving is. Okay. So we're going to have the same amount of users adopting Bitcoin, the same amount of people researching Bitcoin, the same amount of people understanding what this space is. There's literally going to be less Bitcoin being shot out every 10 to 15 minutes or so, right? Which decreases the supply, similar to what these fashion brands are doing. They're burning their excess supply so they can increase the price of Bitcoin. This is automatically executed every 4 years or so, not to the time. It all depends on the blockchain, but every 4 years or so, this is happening. And we can see a direct correlation with the market and the price of Bitcoin. So all data lines up with this 4-year cycle thing that I keep talking about. All the data lines up. As you can see here, there was a bull market in 2011, okay? Now, after the bull market, after people made money, there was 163 days down that we went down, a bear market, okay? The red part is accumulation. Now, keep in mind, as we go through this, we're getting close to the halving. These big black lines, that's the halving, right? These big black lines, okay? So as you can see here, as we're getting closer to the halving, we see the price go up, and then a little bit after the halving, it goes parabolic, 4-year cycles. Let's go to the next one. It's not exactly 4 years. It can be anywhere from 3 to 5 years. So it just depends on the market because it's going to all change because back in the day, there wasn't as much money in crypto. One Bitcoin was worth 17 cents. So it changes. This one was a little bit quicker, being that there was more upside room potential. Now it's going to be a little bit slower as we get further on because there's more money in Bitcoin. The law of diminishing returns basically means that over time, there's diminishing returns because there's more money in Bitcoin. Simple supply and demand. So as you can see here, okay, again, bull market, boom. As we get closer to the halving just happens, then a couple months later, bull market. Okay, oh man, the halving is way too far. Look at this, halving way too far. Bear market, okay? Accumulation, that's where people will like buy, right? Then we see in this case, it was going up a little bit before, right? It's going up a little bit before. Halving, bull market. And we're going to talk about specific numbers. I'm just explaining to people that don't understand, right? Bull market, bear market, because it's far away. Halving's far away, bear market, okay? This is supply and demand. Now, what we're seeing is we saw this influx here going up, okay? Now, this chart's a little bit old. We're like more of like right here where we kind of went down. But as you can see, we're up, right? We see these little jumps here. We're up. Now, what's going to happen potentially is when the halving happens, remember, the same amount of people are still getting into Bitcoin. It's like a perfect storm. Everybody's losing faith in the dollar, right? They're losing faith in the dollar. They're understanding what's going on in the market. They're researching money. Oh man, this is a horrible thing. Manipulation. They're looking for things with fixed supplies like gold. Gold's doing really good right now, right? And Bitcoin just happens to be one of them, right? They're actually deflationary. We're actually going lower than 2%. The U.S. economy plans to be 2% inflation. We're going to 1.8% inflation. And then in the next 4 years, it even goes down even more. So it's literally made to win. It's literally made. It's in the algorithm, automatically executed to win. So as you can see here, right? We're getting closer, and then we could potentially see $100,000 Bitcoin. Now, probably even more than that. Actually, $100,000 is pretty like conservative. So as you come here, Bitcoin logarithmic growth curves, and they call it logarithmic regression. Okay, so essentially they're doing that. They're making predictions, right, from all the past previous history of Bitcoin. This is data science, right? So as you can see here, okay, the tops, we're looking at $100,000 Bitcoin by the end of 2021, right? So just more. This is the one I like to look at a little bit more. The stock to flow model. They use this. I'm sure I've talked about it a couple of times on my channel. If you guys don't know what it is, it's basically a way to make predictions based on the stock, right? They can use this for oil. You can use this for anything that has a limited stock. And as you can see here, these lines are pretty straightforward, right? They're pretty straightforward, and they make a prediction, right? So you can see here, this prediction right here. There's about a 6 to 7x difference. So their prediction of Bitcoin around 2014 was $165, but they were wrong. Bitcoin ended up going to $1,200, give or take, right? Then here their prediction was, a $6,000 Bitcoin. They were about 4 times wrong. Bitcoin went to 20,000, right? Now keep in mind, right? This right here was less than this. It was like a 6x difference. This was a 4x difference, right? And then notice that it happened a little bit after their prediction. Okay, now just to give you guys a kind of understanding of what's going on, the red, it means that we're far from the halving, and the purple means we're close. So we're at the purple right here. We're at this point right here. Okay, so we're looking for that parabolic run right there. So if I were to make a prediction short term, I'm gonna talk about the prediction. So if we look right here, we can clearly say that, it's probably gonna happen probably somewhere in the middle here, a little bit later. Maybe 2022, around here. I'll say the end of 2021, beginning of 2022, midway through 2022, if I was to be safe, maybe more like, 2023 or the end of 2022, if I wanted to be safe, right? We could say safely that since this was like almost a 3 to 4x return, maybe we'll see a 2x from their prediction. So the 2x case would be, you see here, this is $100,000, guys. This is $1 million. A 2x would be a $200,000 Bitcoin by the end of 2021, beginning of 2022, potentially, okay? And if I was to be safe, conservative, I would say we see, personally, if I was to talk about my exit strategy, I'm exiting at 100. I'll start pulling positions at $100,000. So essentially what I'll do is I'll take a certain percentage of my portfolio, split it up into 5 equal distributions, and I'll dollar cost average out. So when Bitcoin hits $100,000, I'll pull out that one equal distribution, right? Then when it hits like maybe $120,000, I'll pull out another big lump sum of cash. Then when it hits like 140, I'll pull out another lump sum of cash. Then it hits 200,000, then I pull out another. That's exactly what I'm doing. But I'm starting my pull out at about $100,000 to $120,000 of Bitcoin. So just in case you guys wanted a cash out strategy, that's essentially what I'm doing. But just to reiterate, the prediction for $150,000 Bitcoin potentially is going to be around the middle of 2021, potentially towards the beginning of 2022. So in about a year's time, guys, we should see Bitcoin. If I were to just predict for like 1 year, I'm looking at this chart, man. It's as you can see, it lags a little bit. So I would say Bitcoin is going to hit like 20,000. It should hit 20,000 in less than a year. I'm thinking Bitcoin's going to hit 20,000 in less than a year, and potentially 150 to 200,000 in about 2 to 3 years. That's my ultimate conservative price prediction for Bitcoin. You guys understand how Bitcoin mining works. You understand how the Bitcoin halving affects due to scarcity. Remember, this is only one property of the money. This is not the only reason Bitcoin is superior. There's 10 other properties to why Bitcoin is superior. I have other videos for that. I'll link it in the description below. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with this technology, you will get left behind. Thanks for watching this video, guys. I'll catch you in the next one.